Welcome to Jack's Crypto. Today we're going to be discussing when to buy Bitcoin based on long-term cycles. Earlier I did a video about when to sell based on the long-term cycles. And a lot of questions that came about because of that of when to actually buy. Is now the right time to buy? Should I wait? When should I buy in order to sell on these 4-year cycles? And that's what we're going to be covering today. So without delaying anymore, let's get right into it. The halving is when the rewards for mining a block of when you're mining Bitcoin, when that is split in half. And this is done every 4 years because what it creates is scarcity of Bitcoin. And it also allows it to take many, many years before all the Bitcoin is actually mined. So if you see that right now on the screen here, you can see that the total supply is 19.8 million Bitcoin. That's how much has been mined so far. The max supply is 21 million Bitcoin. So it's going to take quite a few years to get to that 21 because the halving causes the rewards to be, in half. It's every 4 years. Now I'm going to do another video on the halving and what that means and what exactly happens when that occurs. But today I'm just going to touch on it briefly. So Bitcoin is on 4-year cycles, like I said, and these are called seasons. And these seasons are just like we have, for weather, summer, fall, winter, spring. And I'm going to show you this graph here, which is slightly out of date, but it gets the message across of what these seasons are. And so to look into this, which, like I said, I'm going to do a much deeper dive into Bitcoin halving and these seasons and what they mean. But just for the nature of this video, it's important to know what the seasons are in order to know when to purchase. So when we look at a halving cycle, which was in 2012, 2016, 2020, and now in 2024, we can see that that is the summer. So the halving cycle is normally considered the summer, the halving season. The major gains are normally happen during the fall. Now, if you look at, and it's normally the year after the halving. So the 2012 halving, we can see here, is in yellow. This is summer. And then the red part here of fall, you can see the incredible gains that happened there. We went from $10 to $1,000, right? And then again, the halving in 2016, which was the summer, and then the fall, going all the way from less than $1,000 up to over $10,000, right? And then again, you can see 2020, the halving, which is the summer. And then we had a double peak in 2021, which is not normal. And we've discussed before that this was most likely caused by COVID and the financial crisis that happened. Otherwise, this red would have probably, in the red here, it would have continued to increase up, just like every other cycle did. So after the fall comes the winter. And as you can see, every time the price goes down. Price going down again in 2028, price going down again in 2022. Well, and it's normally in that time or in the spring that it reaches its lowest level for that 4-year cycle in between each halving. And we can see that really clearly on here. In the spring, it reached its low in 2015. In the spring, in 2019, it reached its low. And then here it's, the winter to spring that it reaches low here based on this cycle. This one was a little unusual. But traditionally, that's how it goes. So if we look at us, and this, like I said, this graph is slightly out of date, but if you look at 2024, and as it continued to go up, and we actually reached this 100,000 mark here. then we know that for the fall, we're going to continue to increase, just like every single cycle. So now that we see like how these seasons work, then we know that 2026 is going to be a downtrend, just like every winter before that. So we're looking at when is the best time to buy. You know, if you're selling and buying on these long-term cycles. Well, to really take another look at this, we can look at the yearly candles. And we can see what this candle shows is the price of Bitcoin at the start of the year and then the close at the end of the year. And as you can see, except for when it first started, there were 4 green years and then a red. Otherwise, there is traditionally 3 green and then a red, 3 green and then a red, and then 1, 2, 3, with 2025 being the 3rd green in this cycle, which means 2026 will be a red. So going back to when we talked about selling in 2025, and based on the different areas that we were looking at to see when to sell, which was based on the Pi cycle top indicator chart, if you recall that. If not, I'm going to show that again. We know that we need to sell sometime during this year, and that the best time to buy is going to be either in 2026 late or early 2027. So what I did was I actually looked at the different halvings and when they reached their peak and then when they dropped, and then how many days and what the decrease was. So as you can see here in 2012, the peak was $1,100 on 12/4/2013, but it dropped to $207 by 1/16/2015, which that was a span of 408 days to get to its bottom, an 82% decrease. Same thing in 2016. It was 368 days to reach the bottom from the top, 83% decrease. And then in 2020, which we used the double peak, we used the second peak of the double peak, which happened on 11/13/2021, and it dropped all the way back down to $16,000 by 11/26/2022, which was 378 days, and it dropped 74%. So based on this, we can estimate 365 to 380 or so days for it to reach the bottom. And we can see that there's going to be a decrease of around between 70 to 85% from the high of whichever high that we get in the 2024 cycle, this 2024 cycle. So I think this is really good to look at because we can kind of estimate when we think that the decrease is, when it's going to decrease to its minimum amount, which would be the optimal time to buy again. Same thing. We can see that the lowest points are normally when the short-term moving average and the long-term moving average are the furthest apart from each other, which is also something for us to look at, right? As we're determining when to buy. It's really hard to hit the very bottom, to be honest with you. Getting it anywhere near that will be okay. Here we would have been buying at 19,000, but here we're buying at 16. So there is a difference there, and this is only a month or so. It drops into the 16,000 and then it's back up to 22,000. So 19, 20, down to 16, back up to 22. And really it just briefly touches this bottom part, and then the price starts increasing again because we're going back into spring. And in spring, after the winter, after we hit that bottom, which could be right at the end of winter, right at the beginning of spring, it starts on its upward trend. Because the reason why it's doing that is because people know that the next halving is coming up. So here, the 2016 halving, folks knew that was going to happen, so they start buying Bitcoin is removed out of circulation, the price continues to increase. There's less of it. Same thing here in 2019 in the spring, people are buying. Getting ready for that 2020 halving. And the same thing happened here in 2023. People are buying, so it starts going up again. So you got to buy in this bottom portion each time. So right here in between the winter and the spring, that's when you're going to buy. And then estimating when that's going to be, we have to go by historical data to try to see when that was. So you may not nail it to the day, but you're probably going to get very close. And we are looking at these decreases of 80% or so. When we look at the rainbow chart, going to where we think the cap is going to be the top of this cycle. And then before we had talked about June, but it could be a little later. It could be October, right? So if we go to October, then we can see that, and based on my video before, we had talked about how we're going to be between the yellow, and the orange, somewhere in that orange. So, when we're looking at that in 2025, we're going to be to 200K, right? But then going back down again, when we hit that really low. So if that's the case, if it's going to be a year later approximately, then we're looking at, if we go back to this, this was December, January, and then March. So let's say that it's moving 1 month back each time. So it was January before, December, November, sorry. Then let's say it could be October. So October of 2026. Going back to the rainbow chart, let's try to see if we can find October of 2026. Here we go right there. So that's telling me that our low, could be 109K, right? Because that's the lowest point. However, the last cycle here, we went below the lowest point. So if we're going to go below the lowest point again, if it does that again this cycle, then we can kind of see that, we could get back down to 80K, 70K, something like that, as we continue, as it drops a little further out. But don't expect to ever see $20,000 Bitcoin again, even $50,000 Bitcoin. Using the Bitcoin cycle repeat chart, we can try to predict where we believe that Bitcoin will be in the future. Now this takes data, historical data, and it tries to chart out into where a lot of experts believe is going to be there based on that data. Going by this, it believes that there's going to be another double peak. I don't know if that's going to happen, but I do believe that it's not going to reach its peak until at least summer of this year, but we will continue to use our Pi cycle top indicator to tell us that, right? But going back to this, it says that we're going to reach a first peak of $203,000 around the end of March. And then a second peak of around $216,000 in mid-October. Now, let's go by the October one, right? And let's say that's going to be the max, 216. Then it thinks that our low around November of 2026 is going to be around 55K. So this has us maybe a little higher than we believe that we can go, and maybe a little lower that we believe that we're going to go. But even though the price might not be exactly what the prediction, like my prediction is, the timing pretty much is. Sometime later in 2025, and then late 2026 for the low. So this right here is the area that you're going to want to buy in. Late 2026. This is when you're going to get your best price. Will it go back to 50,000? I'm not so sure about that. I don't believe that it will go lower than 64,000 at a minimum. And the reason why I believe that is because Bitcoin has never dropped below the price it was on the presidential election day of the halving cycle, and that was around 64,000 this year of 2024. So no matter what price it goes to, this is going to be your new buying time if you're a long-term seller and holder, right? Buy, sell, etc. every 4 years. This is going to be your time, end of 2026. If you miss this window, then the price is only going to start going up to there from there, because it's going to get ready for the next halving in 2028. Now, if you're still holding out to buy right now, well, there's still a lot left to go. Every chart and everything that we've looked at here or anywhere else that you've probably seen has it going up to, 150 to 180K. So buying at 100K right now, you're either going to get 50% profit, or you're going to essentially double your money. So you can still buy right now. That's totally fine. You still get quite a bit of money. You put in $1,000, you get 500 profit, right? So it's still a great time to buy. Now, if you're going to wait until later, until it's around 150, then that's probably not a great time to buy. You're only going to see a downside from there. If you found this video insightful, make sure to like and subscribe for more deep dives into the world of crypto. Thanks for watching, and now you know thanks to Jaxx Crypto.